So, Yieldmax just made a pretty big announcement, and if you're someone who's interested in weekly dividend deposits, this one's definitely going to get your attention. Now, they're not just tweaking a fund here or there. Nope, they're basically restructuring how their income ETFs actually pay you. And that's kind of a big deal, especially if you've been building your portfolio around that steady weekly dividends. But before you panic, don't worry, it's not bad news. In fact, it's not really bad or good just yet. It's more like something you need to understand before it surprises you, because a few of these changes might affect how often you get your dividends and how you plan your income around these ETFs. So in this video, we're going to break down what exactly changed, why Yieldmax decided to do this, how it's going to affect your payouts, and what it might mean for the rest of the ETF world moving forward. A quick disclaimer before we start. This video is for educational purposes only. I'm just sharing information about Yieldmax and their ETFs, but this isn't personalized financial advice. Make sure you do your own research or talk to a financial professional before making any investment decisions. All right, let's jump in. So here's what actually happened. Yieldmax just made it official. They're moving all of their single stock option income ETFs to weekly distributions. Before this change, some of their funds were paying dividends on a monthly schedule. You'd get one larger payout at the end of each month. But now, that's changing. Every one of those ETFs is switching over to a weekly payout schedule instead. And in plain English, here's what that means. Instead of one chunky payment every month, you'll now get smaller, more frequent payments every single week. It's kind of like switching from getting your paycheck once a month to getting it every Friday. This is coming into effect on Tuesday, October 14th. Now, the main reason for this change is pretty straightforward. Investors asked for it. Yieldmax's audience is largely income-focused investors, people who like seeing that regular cash flow. And the company decided to deliver exactly that. Weekly payouts make their funds more attractive to folks who rely on that steady income, or just enjoy the consistency of seeing money come in more frequently. But there's one small exception worth mentioning. 12 of the ETFs are staying monthly for now. So basically, unless you're holding one of those Target 12 ETFs, your Yieldmax fund just went weekly. Before we get to the next part, if you want to see more content like this, make sure to subscribe to the channel. Alright, now let's talk about how this new weekly schedule actually works. Because Yieldmax didn't just flip a switch and say, okay, everyone gets paid on Fridays now. They actually organized all their ETFs into two separate payout groups, each with its own little rhythm. So here's how it breaks down. Group 1 is what I'd call the Tuesday cycle. This includes funds like Yieldmax, ULTY, the portfolio ETFs, and the ones that follow the Dorsey Wright strategies. Pause the video here and take some notes, because it's going to be important for you. Here's how their schedule looks. Distributions are declared on Tuesday, the ex-dividend date is Wednesday, and the payout lands in your account by Thursday. So if you own any of those funds, you'll actually see your deposits hitting a day earlier than before, which is always a nice little surprise. Then there's Group 2, which follows what they call the Wednesday cycle. This group covers most of the single stock ETFs. So we're talking TSLY for Tesla, AMZY for Amazon, NVDY for Nvidia, and a bunch of others. Make sure to note these down. Their schedule goes like this. Declared on Wednesday, ex-dividend date on Thursday, and you get paid on Friday. So if you hold multiple Yieldmax funds from both groups, here's the cool part. You can technically get paid twice a week now. One batch hits midweek and the other right before the weekend. And this setup actually does a couple of interesting things behind the scenes. It helps stagger the cash flow, which makes it easier for Yieldmax to manage its distributions smoothly. But it also gives active investors a bit more flexibility. You can reinvest more frequently, or even time your cash flow better throughout the week if you're using these payouts for income. You might be wondering why now? What made Yieldmax decide to roll out this new schedule at a time like this? Well, officially, the company says it's responding to investor demand for more frequent income opportunities. And sure, that makes sense. People love the idea of getting paid more often. But if you look a little deeper, there's more to it than just because investors asked for it. This move is also about branding and strategy. Here's the thing. Investors, especially retirees, income traders, and people building those so-called ETF paycheck portfolios, are drawn to predictability. They love knowing if they are getting their dividends every week or not. Yieldmax clearly understands that. They've realized their niche isn't necessarily about long-term price growth. It's about income consistency. They're leaning hard into that identity now. And it's actually kind of smart when you think about it, because in the past, one of the biggest criticisms these funds got was about NAV erosion, that slow drift downward in share price as the fund keeps paying out high levels of income. Some investors saw that as a red flag, saying, yeah, you're getting big payouts, but your share price keeps slipping. But now, instead of trying to fight that perception, Yieldmax is basically saying, fine, call us the cash flow company. That's exactly what we're here to be. They're owning it, positioning themselves as the go-to name for consistent, high-frequency ETF income. And there's another layer to this. It's also a competitive play. Yieldmax is now the first major ETF issuer to roll out weekly income across almost their entire lineup. That's something other players in the space, like Granite Shares, Rex Shares, and Roundhill, haven't done yet. Most of their funds still pay monthly, which suddenly makes Yieldmax stand out even more to income-focused investors. So this isn't just some minor change. It's a strategic rebrand for Yieldmax to be the name in consistent ETF income. If you're already holding Yieldmax ETFs, you don't need to do anything. The change happens automatically. You'll just see your distributions coming in more frequently and in smaller amounts. For new investors, this is a great chance to start building a cash flow portfolio with regular, predictable payouts. Let me give you an example. Let's say you hold YMAX, which pays out on Thursday, and TSLY, which pays out on Friday. That alone gives you income 2 days in a row, Thursday and Friday. That's why some investors call these ETF paycheck portfolios, because you can structure them almost like a paycheck schedule that pays throughout the week instead of waiting for one big deposit at the end of the month. And that setup comes with a few practical benefits. It's easier to reinvest since your cash hits your account more frequently, letting you put it back to work faster. It also smooths out your cash flow, spreading income evenly instead of spiking once a month, which makes managing expenses or reinvestments simpler. There's also a psychological boost. Seeing that regular income each week can help you stay calm during market dips, reminding you that your cash flow keeps coming even if prices move. Of course, weekly payouts don't increase your total yield. You're just getting the same income in smaller, more frequent pieces. But for income-focused investors, that consistency can make a big difference in sticking to your plan. Now, this shift doesn't just affect Yieldmax investors. It could end up shaping the entire ETF landscape, because what we're seeing here might be the start of a much bigger trend. You can bet competitors are watching this very closely. If Yieldmax's new weekly model ends up attracting a flood of new investors, which it probably will, other ETF issuers won't just sit back and watch. They'll start rolling out their own weekly paying products to keep up. And that means, heading into 2025 and beyond, we could see a wave of new funds switching from monthly to weekly payouts. And honestly, that's great news for income-focused investors, because it could bring more variety, more sectors, more themes, more strategies to choose from. Whichever category, there might soon be a weekly paying ETF. But more funds also mean more competition on fees and yields. Fees could drop, which is good, but yields might dip slightly if too many ETFs overlap in strategy. Still, it's a sign that the ETF industry is evolving fast. Basically, Yieldmax just kicked off the weekly income race, and now the rest of the ETF world has to decide how they were going to respond. All right then, let's take a step back and look at both sides, the good and the realistic. Starting with the positives. First off, you get a more consistent income flow. Seeing money hit your account every week can feel surprisingly satisfying, especially if you rely on these funds for cash flow. It also makes it easier to reinvest and compound. Instead of waiting a month to put that cash back to work, you can start deploying it more frequently, letting compounding do its magic a little faster. And of course, this setup is incredibly appealing to income-focused investors, the folks who love knowing exactly when their next payout is coming. Finally, it adds flexibility. Whether you're planning withdrawals, reinvesting strategically, or just trying to manage your personal cash flow, weekly payouts give you more control over your schedule. Now, let's keep it real and cover the trade-offs. The total annualized yield doesn't change. You're not magically earning more. The same income is just divided into smaller, more frequent pieces. NAV erosion still happens over time. That slow drift down in share price is just part of how covered call ETFs work, so it's not something weekly payouts can fix. If you're holding these ETFs in a taxable account, expect more frequent tax reporting events. That's something to keep in mind if you're trying to simplify your taxes. And a small but practical note, some brokers might batch or slightly delay small distributions, especially if the weekly amounts are tiny. So it's worth keeping an eye on your account to see exactly how it lands. The way I like to think think about it is this. If you're looking for stable, predictable income, weekly payouts can feel really satisfying. But just remember, it's the same cake. You're just cutting it into more slices. Personally, I think this change was kind of inevitable. The demand for income-focused ETFs has exploded in recent years, and moving to weekly distributions just makes these funds even more attractive for regular investors who want predictable, consistent cash flow. Now, I'm curious, what do you think? Do you prefer weekly income? Or do you still like the simplicity of monthly payouts? Drop your thoughts in the comments. I'd love to hear how you approach your ETF income. And what are your thoughts on this change? And if you found this video helpful, go ahead and hit that like button. It really helps more people find the channel. And if you want more easy to understand breakdowns about ETFs and retirement portfolios, make sure you subscribe so you don't miss future videos. Finally, if you're thinking about building a worry-free income-focused portfolio, make sure to check out my video on the perfect retirement portfolio.